Look at the stock market and you can see a perfect storm brewing. There was a time in which the markets were rising month after month after month. It was as if the worst possible news, in fact, somehow made the market rise even faster. Instead of everyone rushing for the exits, they were rushing to get in. Historically nonsensical. But things certainly seem to be changing. You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market, and then I want to focus on another topic, and that is hyperinflation. Let's begin. Here you will see the S&P 500 comparing 2018, 1987, and 1929. Now, we've seen these charts before, and quite frankly, although they do speak to us because they're able to compare these charts, it's easy to make the chart look very similar to previous instances. So we need to take it with a grain of salt, obviously. However, in every crash, there seems to be this run-up that goes crazy. And then ultimately, a retracement, a dead cat bounce, and then a further drop. That seems to be rather standard. The percentages of which, that can be debated. The question that needs to be asked is, was the top that we experienced just a few weeks ago the top for this bull market? And will everything decline from here on out? Or was this just a little bump in the road and they will form new highs and new support bases? That remains to be seen, of course. But I think that the central bank, the Fed, has continued its policy of extremely small Fed balance sheet wind up. And I don't know exactly if they're going to be continuing at the same pace. But if they do, it's going to take a long time, of course. In the long-term scenario, that is very, very damaging because ultimately, who's going to be there to monetize the debt? Individuals definitely will not. So we'll need to see what's going to happen with the Federal Reserve's policy, not just on interest rates, which of course they just increased again, but also their balance sheet. The market obviously can't survive without it. Looking at the S&P, you can see the 2017, seeing this close, comparing to the 2018 low close, and it seems like the potential, we're right in this spot here. Now they're at about 2,500. I think it's going to have to drop significantly below that before we get into danger territory for the markets. Personally, that's the way I view it, not necessarily because of any sort of technical indicator, but just because it needs to come down several hundred points for that snowball effect to kick in. We've already come down a significant amount, but it has to continue. I mean, without that at least 15% from the peak, we're not going to really get that snowball effect to happen. And then the markets to really take effect, that drops further. And then the intervention comes in. Not just plunge protection team. I'm talking about the actual QE4, maybe lowering interest rates or some sort of activity stimulus by the government. 15% I think is the absolute minimum, perhaps 20%. And I'm talking from the peak, not necessarily in a short period of time. We continue to view 1987 as an important analog for 2018 as we have expected a similar cross-market dynamic between commodities, rates, and equities. The 2018 correction has followed a similar trajectory to the two 1987 drawdowns with the exception of the crash phase of October 87. Then it goes on. And you'll see that. But ultimately, as I've said, we need to see how it all plays out. I don't really like to necessarily put all my focus and say, look, if it gets to this particular number, then it's going to drop this much. I don't think it really works like that, personally. Bank of America Merrill Lynch, they provide some good charts in here, and this one is institutional client cumulative net buys of U.S. equities, pension funds, and institutional, excluding pension funds. When you exclude pensions, Look at what has happened since the financial crisis. Very interesting, because you can see institutional, you can see pensions, and basically that's this line here. However, excluding pensions, it tells an entirely different picture. And it is suggested that retail investors have been there to pick up the pieces. Something to note, definitely. I'm noticing oftentimes that the central banks are the only ones buying. Look at Japan, perfect example. What about Europe with the CSPP buying up everything? And then I want to switch gears. Looking at Venezuela, they have gone into a territory that unfortunately is impossible to ever recover from. There is no bailing it out. There's no fixing it. At this point, it's finished. And this seals the deal. They actually did what other nations have done historically, and that is chopping off zeros. When they lop off a few zeros of the currency, you know it's over with. A dozen eggs cost 250,000 bolivars. That's equivalent to $5. So the plan is to chop 3 zeros off of the currency. This is going to bring eggs down to $250. Now, this is not going to resolve any issues, of course. People understand that their currency has lost an extremely large amount of its value, and the paper number that's printed there doesn't matter. It has no effect on what we will actually be valuing that currency at. The number doesn't matter, because if you look at a $100 bill throughout history, what has been able to buy you, whether you're in Canada, the US, the UK, Australia, or wherever, ultimately you know that in your grandparents' generation, that $100 was buying you a lot more than it was today. Don't be fooled by the piece of paper. So here, Maduro's trying to convince everybody that this is a good thing, this is okay, but ultimately, we've seen this before. And Zimbabwe actually removed 12 zeros from their currency. So imagine this, 1 trillion in Zimbabwe dollars is now the equivalent to 1 Zimbabwe dollar. So it was a $1 trillion bill, now it's a $1 bill. Think about how silly that is, how unsuccessful that policy would be. It immediately distorted everything even further. They thought they could make their currency stronger simply by changing the value on their printed bills, but of course that doesn't have an effect. It immediately reverted back to where it was and went even further, because the reason why that money was devalued in the first place was because they were printing so much of it. And just changing the value only delays things by maybe, weeks at most. The official inflation rate, I'm not even sure how they calculated this, but it was 231 million%. Why even bother calculating at this point? Even in Venezuela, where the most recent statistics unofficially are showing approximately 20,000%. It's gone, it's finished, unfortunately. It is over. Now, you've seen this take place before in history as well. The classic example, Weimar Germany. The hyperinflation of 1923, the government resorted to printing money only on one side because it kept having to crank out new currency with more zeros and it couldn't afford the extra printing costs. Why would they even let it get to this point? Just default. Just admit your defeat and then you can start rebuilding. But the further along they take it, the worse the problems get. So if you think that debt can't do anything to a country, it can't ruin it just because you have a printing press, I assure you there are countless examples. Every single time, 100% of the time, any country resorts to the printing press, they will destroy their currency. Look at the failure today that you can see in Japan, where this country is now buying 75% of all the ETFs. Nobody's buying. It's not successful. It is not successful. And then I want to turn the page over to Baltimore. I thought this image was quite good. Instead of Baltimore, it's Balta-less. You can see that here on the left side. And unfortunately, what has happened here over the years, this is going back all the way, it looks like 1970, and you'll see that trend. Declining population, resident population in Baltimore City. Unfortunately, this has been the case for decade after decade after decade, but hey, even if you look at it since the financial crisis, it's a continued action. More and more people are leaving. The prosperity is leaving, industry is leaving, crime is increasing, and you could see what goes on throughout times in which people do not have prosperity. They do not have proper systems in place. The government is basically further burdening the people instead of being able to use the money wisely and actually provide something of need to the individuals. They don't do anything to help us. They only use our tax dollars against us. Any nation that resorts to printing currency to create a bloated bureaucracy will never be able to resolve the issues that individuals have. And that's why I believe in a very limited government. The more the government tries to do, the more they're going to screw it up. And that is an ultimate fact. When you could look at all of these examples throughout history and be proven over and over and over again that they can't fix anything. So don't let them try. Don't beg the government to try and fix something. It's not going to work. It never will work. Never has. Why would things change? And that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So I do appreciate that very much. If you want to take a look at these books, all you need to do is go to the link in the description, and there's a look inside feature that's going to allow you to flip through the pages of these books to see if you like them. Take care.